If you had a magic wand that you could wave to solve one business problem, what would that be?
You've got to be sure that as the business grows, your employee base is growing as well to be able to support now a larger business.
One of the biggest things and most important factors of any part of their business was hiring the right people.
Is there a problem in the market that I'm trying to solve for? You as a business owner needs to change.
Welcome back to the podcast From Cold to Close. My name is Saeed and I'm the founder here at SRC Growth Partner, a company that works with professional services firms from around the world to help them increase their revenue and profitability by acquiring new clients. My guest today is John Bartlett. John is the founder and CEO of Brentwood Growth, an advisory and consulting firm that grows and works with service providers and contractors in the residential, commercial, and industrial markets who are considering a sale in the near term, wanting to scale their business for a potential future sale or establish a self-managing company. So, welcome to the podcast, John. How are you doing?
I'm doing well, thank you. Thanks for having me on.
Yeah, no, appreciate you jumping on, and I'm really looking forward to the conversation. I probably didn't do justice in giving a little bit of background of who you are and the organization. So the best place to start, I think, for our viewers and our listeners is probably giving you the opportunity to out your founder's journey and explain to the to the viewers and listeners who you are and how you founded an M&A advisory firm like you have now.
Well, thank you for that. We all have a story, don't we?
Yeah, absolutely.
So, I'm 68. I've been a serial entrepreneur my entire life. I bought and run and sold a handful of businesses over a 35-year career. I sold a business about 10 years ago and tried to retire. I wasn't very good at it. I stayed retired for a couple of years and then drove myself crazy. I wanted to find something to sort of get back in the game. Having bought and run and sold several businesses, I sort of knew the drill. I've used investment banks to help me get my businesses sold. I've sold them to private equity firms. Have lived for the majority of that time, we lived in the New York area and had a bunch of buddies that were in investment banking and in private equity. And so that was just sort of part of my I don't know, network ecosystem, if you will. Being a baby boomer, I certainly understand the sort of silver tsunami that's moving through the pipeline out there across the US and across the world in terms of the number of businesses that are owned by, baby boomers where their kids don't want to take the business over and the founder needs to sell the business in order to retire. I felt like having done this several times before, that would be interesting. As I looked at sort of the investment banking business brokerage space, if you will, I felt like there was a gap in the market of companies that were wanting to sell that were maybe a little bit larger than what the traditional business broker would be able to handle, but a little bit smaller than what the investment banks would do. And so I sort of decided to focus on working with companies that had enterprise values roughly in the $5 to $50 million range. I felt like a lot of what investment banks did and what business brokers did from a lead sourcing standpoint, getting in front of founders, getting in front of the sellers, that was a bit stale and antiquated. And there was a way to, do a more efficient job using technology tools today, both from an inbound, outbound standpoint, sort of get in front of business owners, founders, and bring them into an ecosystem. So it was a combination of things. I decided to set this business up. This is pre-COVID. So we set up an M&A advisory business that was really geared to that $5 to $50 million market. In the beginning, it was industry agnostic. And so we'd be working on a manufacturing deal. We'd be working on a logistics deal. We'd be working on a IT managed service deal. And all those were interesting, but there was a lot of lift in terms of understanding the nuances of these sectors, understanding who the buyers were, being able to run an effective process for the seller to get the business in front of qualified buyers to be able to get those deals. And so I always had in the back of my head, in order to scale, I needed to niche down into certain industry focuses. It's sort of the slogan, the
Riches are in the niches.
niches. Yeah. And so I sort of kept that in the back of my head and said, I got to niche down. I got to niche down. I don't know it's down. COVID hit, things began to slow down. Through COVID, I began to hear this concept, essential services, and I didn't know what essential services were. And when I began to sort of pull the string on that, I began to realize what was considered to be essential services as we, sort of moved through COVID. And I began to realize a lot of the service components to a home and to an industrial building and a residential building were considered these essential services. And that caused me to sort of spend more time looking at the HVAC space and looking at the plumbing space and looked at the electrical space and looking at the roofing space and looking at the garage door space. And I was just blown away with how large these sectors were and how fragmented these sectors were, how many businesses there were across the country here in the States and in North America and across the world. How many of these were owned by baby boomers? How many of these, the baby boomers were beginning to think about selling the businesses. And so sort of all that made sense to me from a supply standpoint. And then I began to talk to a lot of my private equity buddies, and I was equally as impressed with how many private equity firms there were out there that were doing roll-up consolidations in these various sectors. And so I'm sort of making this sound like this was a linear process where the decision came very quickly, but it was really a painful process that, stretched over a 2 or 3 year period. I made the decision about 3 or 4 years ago to niche down in the trades. And so the way I define the business today, we're sell side advisors. We work with owners that are sellers that are in the trades, either service providers or contractors, residential, industrial, and commercial focused. And that includes about 25 different sectors. Things like HVAC, plumbing, electrical, roofing, garage door, lawn care, irrigation, mosquito and pest, chemical fertilization, foundation repair, cleaning, janitorial, fire and safety, elevators, anything inside or outside a home, a residential, industrial building. As you mentioned, our clients are the business owners, and they fall into one of two categories. They're either thinking about selling the business in the near term, and they want to know what the value of the business is and who potential buyers would be and what a deal structure would look like and what a timeline would be to get the business sold and for them to transition out. Or they fall into a second category where they're thinking longer term, but they think they still might want to sell the business at some point, but they're not ready to sell the business. But they want to know what the value of the business today is and the kind of things they need to focus on to increase the value of the business, to increase the marketability of the business so that when it comes time to sell, they can have the best outcome possible. So we've got an advisory part of our business for those owners that are maybe wanting to sell the business. And then we've got a consulting side of our business, those that are wanting to scale the business potentially for a future sale.
Sounds really interesting. And I think that makes a lot of sense in the sense that with your ideal customer profile, the people that you're looking to go after, first of all, if COVID clearly provided you with an insight of essential workers and going, okay, well, if this is a type of industry that is always going to be around, then that means that you will always get business. So I think that's a really interesting way to lean into your niche that you would be going into. So that's quite and I guess with entrepreneurship, it's always about pivoting when things will happen and you just have to pivot. And so being able to go, okay, well, this looks like the opportunity for me, going into that direction, leaning into it is really interesting to hear. And obviously, I love the way you also said that everything sounded linear, but it never is, right?
Oh my
And
gosh. What's funny, I don't know, maybe 4 or 5 years ago, I would sit down at the end of each month and I would think about, oh, what are the, 5 or 10 fairly significant decisions that I made this month? And I would sort of make a list of those 5 to 10 decisions that I made that month. And then the next month I would come back and I would do the same thing. And the following month I would do the same thing. And so, over time, this list has sort of built. And if there are 5 to 10, fairly significant decisions you made that month, and multiply that out over a 12-month period, and then you multiply that out over a 5-year period, you've got a pretty substantial list there. And it's amazing to go back and look at the list and look at all the little items that are on that list of things at the time that seemed such significant decision that I made at the time. And I mean, there are things on there that it was like, I mean, that was, there was nothing to that. Why was I stressing over that? And then there are other things on there that, that was a really significant decision that I made at that time, particularly when you project out what that turned into, and you didn't realize the importance of making that decision at that point in time.
Yeah, no, that makes me think about the term opportunity cost, right? And the decisions we make, but also the decisions we don't make, right? And the decisions we make that may seem insignificant, or we might be stressing over it, but in the grand scheme might be insignificant, actually have a real payoff at the end of it, like a real payoff. I think that leads into my next question, in the sense that there's a lot of people in the market that, and with the baby boomer generation looking to get rid of their businesses or retire and unable to sell, there might be a lot of misconceptions that are held by business owners. What are the most common misconceptions business owners have about selling their company, and how does your advisory approach address those misconceptions?
I think the biggest misconception, and so many owners don't think of it this way, the difference and this is going to sound cruel the way I'm going to say it. And I don't mean for it to be cruel, and I don't mean for it to be negative. But there's a difference between a company and a job.
Mm,
Okay. And so, I mean, I've got this concept that I've sort of developed over time, and a lot of it came from buying businesses and scaling businesses and growing businesses in my previous life. I think businesses fall into different categories. We always talk about the revenue size of the business, the revenue size of the business. And yeah, I mean, that helps us easily categorize where a business is. But quite frankly, revenue is just sort of a vanity number that in itself doesn't mean anything. But I'm going to use revenue as a placeholder here. So I think businesses fall into different categories by their revenue, but more importantly, by the number of employees that are involved in the business and by what the owner's responsibility in the business is day to day. And so the way that I talk about business is, you've got a level 1 business that's doing 500, and it's going to look and feel a certain way in terms of the number of employees and in terms of the role that the owner is required in the business on a day-to-day basis. And then you've got a level 2 business that's $1 million a year business. And, it's going to look a little bit differently, because obviously the business is twice the size. The number of employees are going to be twice the size. And the owner's involvement in the business day to day, it's obviously extremely important, but there beginning to be other people around the owner that can begin to do some other things also. $1 million business, it might be the owner, and it might be 3 or 4 employees at that point. And so the owner's able to delegate certain things. Okay. So that's a level 2 business. A level 3 business is doing 2.5 million of sales.
mhm,
And it's going to have 10 employees. It's going to look and feel different. Level 4 business, it's doing 7.5 million. It's going to have maybe 25 employees. It's going to look and feel different. A level 5 business is doing 15 million. A level 6 business is doing 50 million. A level 7 business is doing more than 50 million.
mm,
And so as you think about businesses in those 7 categories, going back to your question, until a business gets around 2.5 million of sales and until it gets around 10 employees, it's difficult to sell that business. It's difficult to sell that business because the business is the owner. The owner controls everything. The owner probably the vast majority of the relationships with the customer, the owner has.
mhm,
The relationship with the vendors, the owner has. The field staff, if you will, or the operational staff, yeah, they're beginning to be more people that are doing different functions from an operational standpoint, but it's still the owner. Now,
mhm,
when a business is sold, the value of a business is determined by a multiple of the cash flow that the business generates, a multiple of the cash flow profits that a business generates. So you can look at the profit and loss statements and you can make the adjustments in the profit and loss statements. You can determine what the actual free cash flow of the business is. And it might be 100,000 of cash flow. It might be $1 million of cash flow. It might be $5 million of cash flow. You can figure out what that cash flow number is. Buyers are buying a business's ability to produce cash flow. Okay. And they want repeatable, predictable, scalable cash flow. And they value the business and they measure the risk of that cash flow by the multiple that they're willing to pay. Smaller businesses that are very owner dependent are going to have fewer clients. If the owner was to leave the business, there's going to be a dramatic impact into the revenue of the business and the cash flow of the business. Those businesses, from a buyer standpoint, are very risky if the owner were to leave, and they're going to pay a very low multiple for those businesses because the business is so owner dependent.
Mhm.
Larger businesses, not only is the cash flow higher, but the risk becomes lower because the owner's involvement in running the business day to day is less and less and less. And so, a business that's generating $1 million of cash flow that's got 40 employees or 30 employees, that has a very different profile. If
Mhm.
the owner were to leave, there might be a little nudge here or there in the cash flow, but the business is going to keep chugging along. And so I think the biggest misconception that so many owners have is they don't realize because of the size of the business and because of the owner dependency of the business, when it comes time to sell the business, how the market is going to view what that business is really worth. And so from a valuation standpoint, it's going to have a low valuation. And then the number of buyers that are going to be interested in buying that business, there's not a big pool of buyers out there. For a lot of these smaller businesses, you need a buyer to be a younger version of the current owner.
Mhm.
If the current owner is 65 years old, the perfect buyer would be their kids, but the kids don't want to come to the business because they see how hard mom and dad have worked in the business. And so you've got to find, that perfect junior version of you where you were 30 years ago that's going to step in and, take over your day-to-day responsibilities and run the business similar to the way you've been running the business and draw a salary and a distribution, a paycheck out of that. And all that sounds good in theory if you can find that person. But, you've got a business now that's worth $300,000 or $600,000 or $1 million. Can that 32-year-old that wants to come in and buy the business, do they have the financial capability of buying a business of this size now? And so it becomes a challenge.
That's really interesting you mentioned that. And I think just from a very logical point of view, if someone was to want to buy a business, you surely want to be buying something that's as low brow as possible, as low touch as possible. You want to be able to buy an asset that you can roll up into your business, have minimal difficulties in being able to do that and being able to run that business. So it makes sense from a standpoint of, if you have more employees, 40 employees at $1 million versus 4 employees at $1 million, the valuation is going to be very different, right? At the end of the day. So I think that's a really interesting point. In terms of, then, you spoke about how you were previously a serial entrepreneur, and clearly
Right.
from the way you speak and your understanding of exiting businesses, selling businesses, and your experience, I wanted to ask you more about the growth side of a business and growing an organization to make sure that you get the exit that you're looking for. What should a business owner be looking at if they were to look to grow and exit in the next 5 years? What should a business owner be focusing on within the business to be able to get themselves the best possible multiple?
There are two parts. Well, there are several parts. Number one, even before you think about growing the business, from a revenue standpoint and from an employee standpoint, the first thing you've got to do is you've got to be sure that the business is optimizing the profitability that it should be generating under its current structure, maximizing the profitability under its current structure. I've got this expression that I say, revenue is a vanity number, profitability is a sanity number. And so, I mean, we all talk about, my business did 500,000 last year or did 1 million last year or did 10 million. Well, I mean, that tells a bit of the story. What really matters is if your business grows to $1 million, what are the net profit margins off that $1 million of gross? And so I think even before you think about growing the business, you've got to be sure that your business is operating as profitably as it can. You've got to look at your gross margins, you've got to look at your pricing structure, you've got to look at your cost of goods, you've got to look at your operating expenses. You've got to be sure that your gross margins and your net margins are being properly optimized. Okay, so even before we talk about growing the business, let's be sure the profitability is where it needs to be. And let's be sure that the business is sound from a cash flow standpoint, from a working capital standpoint. Let's be sure everything is in sound footing there. Okay. After that's been accomplished, now you can work on I want to grow the business. I want to grow the business at 10% a year or 20% a year or 30% a year. And, you can begin thinking about how you're going to accomplish that. Okay. In order to grow the business, there are two things you need to think about. Number one, how are you going to grow the top line? And that's about marketing and lead generation and sales and conversions. And so you've got to focus on that part of the equation. The other part of the equation is as the business grows, you've got to be sure that your employee base is growing as well to be able to support now a larger business. And as this business grows, I mean, going back to the analogy that I used before, it goes from a level 1 business to a level 2 business to a level 3 business to a level 4 business. You go from 2 employees to 4 employees to 6 employees to 8 employees to 20 employees. All of a sudden, departments begin to be formed. You begin to have a marketing department. You begin to have a sales department. You begin to have an expanded operations department. You begin to have a finance department. You begin to have a technology department. You begin to have an HR recruiting department. So you've got to think about, you've got a larger business. The business is more complicated now because there are more moving parts. It requires more people to run this more complicated business. It's going to be a different org chart. You got to figure out how you're going to recruit people and onboard people and train people and plug them in. And you got to have departments. You got to have processes. You got to have KPIs. I mean, all of that is part of scaling a business. And, quite frankly, I haven't even talked about the most important thing. The most important thing is you as a business owner needs to change.
Mm.
You need to change the way you think about the business. You need to this is going to sound weird, but, entrepreneurs are an unusual lot. We become entrepreneurs because we're very independent and we're sort of control freaks and we don't want to work for anybody else. And we think our way is the best way. And I mean, that's what makes us great.
Mm.
And that's what gives us the passion and the determination and, all the tough days you grind through that because you're so determined. I can't go work for anybody else. I got to go make this thing work. You as a control freak entrepreneur, you can only take that so far. At a certain point, you need to begin to give up control. And you need to begin to trust other people. And you need to yes, they need to be held accountable. And yes, you need to know what's going on. And yes, you don't want to be surprised. And all of that stuff needs to be put in place. But you need to become more trusting and more willing to give up control for the business to be able to grow and scale beyond what you can do by yourself. And, a lot of entrepreneurs are not able to break through that barrier. And, that's why businesses get stuck at a certain level.
Mm.
They get stuck at $1 million of sales or 2 million. They're stuck because the entrepreneur is not willing to reinvest back in the business the way it needs to be reinvested in order to grow. And the entrepreneur is not willing to give up control because they don't trust anybody. And
Mm.
they just sort of hit that ceiling and they can't go beyond that.
Yeah, I think that's a really, really interesting point, and I think a really great point for our listeners to hear, and one for me to hear as well. I can definitely resonate from some of the things you said there. I think running your own business requires a level of independence that most people do not have, right? Because you are in charge of every single minute of your own day.
Everything. Everything.
Everything, exactly. And so if you are not accountable for every single minute, the business dies. So there's a real jeopardy there. And so then you have to weigh up that jeopardy versus trust. And then what you find and what you hear from experienced entrepreneurs like yourself is that moment where you break the barrier and hire the right type of people, that you trust the right type of employees, and you will make mistakes. And I've done many of these podcasts now where I've spoken to 7, 8 figure business owners, and they've all said one of the biggest things and most important factors of any part of their business was hiring the right people. We had a podcast recently where the guest specifically said that he spent 3 years trying to recruit one person. But that one person changed the dimensions of the business and allowed him to work more on the business rather than in the business. And
Yes, it is hiring the right people. And obviously that's of critical importance,
mm,
but it's also giving them the right framework in order to be successful
mm,
in terms of what you're asking them to do and what they're agreeing to do. And having the right reporting, communication, accountability structure in place so that giving up control doesn't mean that everything's going into a black hole and you don't know what's going on. It doesn't mean that. There's a communication rhythm that can be established where you're giving them the freedom and flexibility in order to execute what it is that you need for them to do and they agree to do, but yet you're being updated and informed, and you're aware of progress.
mm,
And when yellow flags begin to go off,
mm.
you're able to deal with those yellow flags because before they become red flags.
Yeah. I think that's a really great point you mentioned there, because we always hear about things like standard operating procedures, right? SOPs, for those who aren't aware. But even internally, we're a relatively new business. We've been running for a couple of years. We're very much a startup. But internally, when we've been hiring, one of the biggest things I needed to learn to do was go, okay, everything I do, how do I put that into a process? How do I create a framework, a standard operating procedure? So when I hire someone, they can pick that up and do those tasks, and I can buy back my time, right? And I can trust that person to execute on those tasks by having an open line of communication, a weekly stand up, a daily stand up, to be
Yeah.
able to, it's, yeah.
Yeah. And let me give you one more thing.
Mm,
So there are probably 5 to 10 KPIs, key performance indicators, that you use to track the business, and either you do it on a formal basis or you do it on an informal basis. And when you think about it, it's, how many leads came into the funnel? How many of those did we convert? Stages of the pipeline. How much cash do I have in the bank? What are my receivables coming in? What are my expenses over the next week to 2 weeks? When you really think about the business, you can break it down into there are 5 to 10 things that I need to review on a regular basis that sort of gives me a gut check as to how the business is doing this week. Okay.
mm,
Figure out what those 5 to 10 are, and then hold yourself accountable and hold your team accountable to those 5 to 10 on a regular basis, so that if stuff starts to slip, you can
mm.
address it and you can try to get it fixed before it becomes a big issue.
Yeah, no, it's a really interesting point, and again, spot on in the sense that if you don't have those conversations early enough, that small issue can develop into some bad habits and a bigger issue down the line, for sure. Um, in terms of your business journey, what's been the most challenging part and aspect of growing your own advisory business, and what are the key lessons from it? What did you learn?
I think the biggest challenge, well, it's several things. So, I mean, this is the way I think about any business. Okay. is there a problem in the market that I'm trying to solve for? And maybe I solve for that problem with a product. Maybe I solve with that problem with a service. Okay. So, what's the value prop that I'm bringing to the market? Okay. That's point one. Point two is, who is my ideal prospect that would be interested in solving this problem, be interested in buying this product or service that solve this problem. Okay. That's two. Three is, how do I get in front of this ideal potential customer and begin a conversation with them and sort of bring them into a pipeline?
Mm.
Okay. A pipeline process.
Mhm.
So that's three. So I've defined the product. I've defined who or product. I've defined the need in the market that I'm solving for.
Mhm.
I've figured out who my ideal potential customer is. I've figured out how I'm going to get in front of them and begin a conversation and move them through a pipeline where I'm going to be able to close on that business.
Mhm.
Okay. And then once I close on that business, I got to be able to perform whatever function that it is that I promised on the front end I would do, whether it be a product or service. And can I deliver a world-class product to solve that or a world-class service to solve that?
Mhm.
And then can I um can I deliver this on a profitable basis? Okay. Fixed expenses, variable expenses. Can I make money at this? Okay. And then once I've figured all of that stuff out, it's like, okay, I've got it now. I've got it now. How do I scale this thing? And so I don't know how many things I just ticked off. You've got to figure out the problem that you're solving for. You got to figure out what the product or service is. You got to figure out who the ideal customer is. You got to figure out how to get in front of the customer and bring them through a pipeline. You got to figure out how you're going to close the business. You got to figure out how you're going to deliver the product or service. You got to figure out how you can make money at it. You got to figure out how you're going to scale this thing. And then I guess the final piece, once you've accomplished all of that, you've got to figure out what the end game is that you as the founder entrepreneur want ultimately to do with this after you've solved everything else.
Mhm.
Do you want to build this thing and you want to sell it and make a bunch of money off that? Do you want to stay involved in the business for, the next 20 years because you love just being involved in the business and being, in the game and you want to run that hard? Or you want to sort of set it up where it runs itself and you check in as a, chairman once a month and you get a nice fat check once a quarter or something? They're different end games. And so, through that journey, I'm 68 years old. I've been doing this crap for a long, long time, and there've been many ventures along the way that I've been at different points of that. And, some of them have had successful outcomes and some of them have not. And that's part of the entrepreneurial journey is, you're not going to bat 1,000. You're going to try some stuff and it's not going to work. And hopefully you'll fail fast and you'll shut it down and you'll move on, to something else. I mean, that's the life that we live in. I think the challenge is, though, once you've found something, is being sure you know exactly where you are in that journey and you're optimizing the opportunity based upon where you are in that journey. And dependent upon where the business is in that journey, there are going to be different challenges at different points along the way.
Absolutely. Yeah. Completely agree with you. It's very interesting to hear that, in the sense that where you are at the start of your journey, you won't be doing the same things as you are 10 years into the journey. And that's the point. You're supposed to learn, you're supposed to develop, you're supposed to fail fast, as you said. And the quicker you fail, the quicker you learn how to do things right, right? And then when you can do things right, then things can improve quicker than it once did. So I think it's
You
really
know,
interesting.
it's a little bit, when you listen to an actor that's in their 80s tell their story about, how they got started and how they ended up in the theater in New York. And, I remember Gene Hackman just died
Yeah.
a couple of weeks ago. And it was interesting to sort of remember what his career had been like for 80 years and where he started and how he ended up in New York and how that his Broadway experience led to moving to movies and how his career had different twists and turns. And he's about the same age, or he was about the same age as Al Pacino, and you hear Al Pacino's story. And he's about the same age as Robert De Niro, and you hear Robert De Niro's story. And it's sort of interesting when you hear the story of all those three, they're different, but they're similar.
Mm.
Okay. When you hear an entrepreneur tell their story, they're different, but they're similar. So, entrepreneurs are all on a similar journey, even though each journey is unique, but it's got different stages that are very similar that we all experience together as we're going through that. And if you go back to the 7 levels of growth, a $500,000 business, a million business, a 2.5 million, if you compared where different entrepreneurs are in that journey and they compared their notes at each of those stages, I think you would be amazed at how similar their stories are at each of those stages.
Run a lot of these podcasts now, and you can hear so many similarities, especially the first question I ask about the journey and how they got to where they are. You often hear the same kind of journey, same kind of thought processes and things like that. And that says a lot about the journey of an entrepreneur. And that leads into the next segment of the podcast. We call it the Entrepreneur's Room. And this segment is essentially a list of questions that we like to ask all of our guests, and they're consistent questions that we ask over every single podcast. And the first question I wanted to ask you here is, how are you currently spending your days in the business?
Well, so my business is, as you go back and you talk about different stages. So I'm at the point where we know exactly who we are. We know exactly what our value prop service offering is. We've got the lead gen. It's not nailed, but I'm confident that the lead gen is properly in place and the business has the ability to continue to scale. So although I'm involved in a lot of the top of the funnel activities, mostly where I spend my time is sort of continuing to build the infrastructure out and getting the right people in the right departments properly formed and functioning possible so that the business has the ability to continue to scale.
Makes sense. Makes sense. Working on the business rather than in the business, right?
Yeah. Yeah, 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 and that's hard for me because I mean I love talking to people. I love it, interacting with the customers who are our you know, business owners that are wanting to sell or wanting to grow, and I love hearing their stories. And so I'm having to force myself out of having a lot of those top of the funnel conversations, and I miss that, quite frankly.
I can imagine you're basically practicing what you preach, right? In removing yourself from the day-to-day operations. So, yeah. Um,
Try.
you're trying to exactly. What are the what are the most important metrics for your business? What is it? What are the metrics that you look at when you're going every month, every week, every
Yeah,
quarter?
yeah.
What are the most important that you look at?
I look at leads.
Mhm.
How many leads did we bring in, yesterday or last week or last month? And what are the lead channels that those are coming in at? And we've got about probably 12 to 14 different lead channels. And so we'll look at how many leads did we bring in month to date, and what are the lead channels that those are coming in at, which ones are performing well and which ones are not performing well. We've got our entire our pipeline stages have about 12 different stages in them, and I'll look at how many deals are in each stage and how sort of that snapshot pipeline in terms of deals in each stage, how that compares to the previous week, to be sure stuff's not getting stuck in the pipeline and it's sort of rotting there. I want to see. I'm very focused on Sorry about that. I'm very focused on leads coming into the pipeline and then the velocity by which they move through the pipeline.
Mm-hmm.
I mean, everything's like an inverted pyramid. You've got a lot of stuff that are at those early stages. And then as you move deeper and deeper to the pipeline, it begins to thin itself out. So deals that are in the latter stages of the pipeline. I might not know the specifics of all of those that are in the early stages, but as they're getting closer and closer to closing, I'm very much aware of the names of those deals and where they stand. And so that whole pipeline thing. I look at cash in the bank. I look at receivables. I look at cash flow.
Mm-hmm.
I pay an enormous amount of attention to that. I look at profit margins. I look at the P&L on a weekly basis, on a monthly basis, on a quarterly basis, and I'm laser focused in terms of what our gross margins are and what our net margins are. Well, I would say those are
Sure.
as I go back, there are probably 5 to 10, and the 5 to 10 that we really focus on are somewhere in those areas that I just described.
Yeah, makes a lot of sense, and it aligns with a lot of other business owners and what they do to make sure they're on track to be able to be having a successful quarter, successful year. In terms of, you mentioned you have 12 to 14 lead generation sources or lead sources. What are those lead sources? You don't need to mention all 12 or 14, but what are some of them, and what are your most successful lead sources generating you opportunities?
We've got a database. We've got about 300,000 owners across these 25 trade sectors in our database. And we do a lot of email marketing out to that database. And so email marketing is one. We've got a telemarketing team. We've got a way of sort of accumulating score rankings within those 300,000 based upon what their viewing habits are and how many times they go to our website and how long they stay on the website and if they look at the videos. And so we're constantly updating what the score is of each of these contacts. And then we've got a telemarketing team that sort of follows up on those leads when they reach a certain score level. So email marketing is one, telemarketing is one. We do Facebook ads, we do Google ads, we do SEO. And so we pay a lot of attention to what our ad spend is and what the conversion of that ad spend is. We look at our keyword ranking, we look at our web traffic. And so SEO is important. We've got a YouTube channel. We've got a fair amount of sort of educational content that we've put out there on our YouTube channel. I've got a podcast that I've started, and I mean, similar to you, again, we're trying to build a brand. We're trying to put educational content out into the market. And so the podcast channel is one. So I would say the top 6 or 8 channels: email marketing, telemarketing, SEO, pay-per-click, YouTube. Those are probably the top 5 or 6. We've got referral partnerships, and so we leverage off that also. So those, I mean, in those 6 that I just mentioned, probably 80% of our leads come from those 6 channels right there.
Makes sense. And those are, I guess, some of the primary channels for lead generation, isn't it? Especially good quality and trying to gain cold traffic and bring them into your ecosystem. So that makes a lot of sense. John, final question. If you had a magic wand that you could wave to solve one business problem, what would that be?
Business problem in my business?
Yes.
Greater lead volume and greater quality leads.
Nice and easy. You knew exactly
I
what.
could solve that one. Everything else would be a piece of cake.
Sounds about right. I can definitely hear that one. John, it's been an absolute pleasure. Thank you very much for sharing your time today and sharing your insights. It's been a really great conversation, and hopefully our viewers and listeners have enjoyed it as much as I have. If they wanted to look for you and find you, where could they find you?
Then go to the website, brentwoodgrowth.com. You can go there, and there are a bunch of ways to contact me on there. You can go to LinkedIn, John Bartlett, and I'm there. You can email me, jbartlett@brentwoodgrowth.com. You can call me. It's 908-377-7807. And so, there are a bunch of different ways to track me down.
Fantastic. Well, John, absolute pleasure. Thank you very much for sharing your
Thank
time
you.
today. Appreciate it. You too. Bye.